Hey everyone, welcome to the very first video of the Invest IQ, where we make investing easy to understand. My name is Uzo. Today I'm going to be talking to you about how to get started in investing as a beginner. Now, I'm not like a Wall Street guru. I'm not in a fancy suit. I'm just a regular guy like you. I only happened to start investing 6 years ago and I took it seriously. Last year, in the year 2014, I was able to make 56% interest. Yep, 56. I'm be willing to share those strategies with you today. I only stayed consistent and stuck to a strategy that works. So today we're going to talk about why investing is important. We're going to talk about some investment options. I'm going to tell you about the difference between investing in index fund versus investing in individual stocks. We're going to talk about how to make money in investing. We're going to address some popular fears in investing and how much you need to get started, as well as step-by-step guide on how to get started. Now, let's start with a simple question. Why invest in the stock market, right? Now, there are two ways why you need to invest, and my favorite one is to buy freedom, right? Let's break it down. Now, you need to invest in order to make those trips. I know you want to save for retirement in the future, right? You want to make sure your kids have a great future, as well as be able to meet those bills when they arise. So the money you invest today will give you that future that you desire. Now, the second reason is if you're not investing, you're probably losing money, right? How? You're going to lose money through inflation. Take for instance, some years ago, like 2 years ago, a loaf of bread might be $2. Today is $4. If you save your money in a savings account at interest fee of about 1% and inflation is running at about 2%, that means you're actually going backwards, right? So you want to invest your money in a market that beats inflation in order to make sure you always stay up, right? Now, what are the types of investments you can choose to go into? Now, you can choose to put your money in the bonds market, which is like lending your money to the government or companies, right, in return for interest. This is a stable investment. It doesn't fluctuate a lot, but if on the flip side, you're not going to make a lot of income from that as well. The popular one is people also choose to invest in real estate, right? But the drawback is that you need a lot of money to get started in the real estate. But the good thing is that when you get started, you're going to earn interest income from renting, as well as capital gain when your asset appreciates, right? I also choose a lot of people these days talk about crypto, investing in crypto. It's quite volatile to go into the crypto market. It can rise and you make a lot of money, but at the same time, it can also crash and you tend to lose a lot. So you want to be careful while going into the crypto market and every form of investing for that matter. Please note that this is not a financial advice, as investment comes with a lot of risk. Now, moving on, you can also choose to invest in your friend's business or invest in any business idea that you have as well. That is one form of investment. And speaking of investing in businesses, that is where the stock market come in, right? Now, what is the stock market? The stock market is all about buying a fraction of a major company, right? I'll give you an example. You can choose to invest $100 in Apple. If Apple performs well, and one share of Apple today, I think, is $220. Let's assume you put $220 in Apple, and Apple performs well this year. In the next 2 years, Apple performs well in the next 2 years. That means your share price is going to rise from $220 to, assuming, $300. That means you're going to make $80 as income. On the flip side, if Apple doesn't perform as well and drops to around $180, that means you're going to make $40 loss. So you want to be careful while investing in any company and do your due diligence, do your research. If possible, consult a financial advisor before investing in any business. Right now, the other thing I want to talk about is the other option for beginners is to invest in index funds. What is index funds? Index funds is a basket of top performing companies. A typical example is the S&P 500, which holds top 500 performing companies in the US, right? Now, the fun fact, the index funds is weighted. That means that some industries hold higher percentage of the companies you have in the S&P 500. Okay, for instance, the tech company might have about 27% holding in S&P 500. The healthcare industry might have about 11%. The financial industry, where you have the likes of JP Morgan Chase, Visa, MasterCard, they might have about 14%. Now, if you put in $100 in S&P 500, what it then means is that you're going to have $27 put in the stock market, and then you have about $11 put in healthcare industry, right? So that gives you diversification, which is like having your eggs in many baskets, right? And it's a very good way of hedging risk for beginners. Now, we're going to talk about one critical aspect again, which is how do you then make money in the stock market? We've addressed the aspect of capital gains, which talks about if your value of your investment grows, you're going to make money. And then let's talk about area you make money from, which is from dividends. Now, what are dividends? So dividend is assuming you put some money in Johnson & Johnson, and Johnson & Johnson, the company, they make money. They make about $100 million this year. And then they decide to share a portion of that profit to their investors. They're going to pay that profit in the form of dividends. It's like having your capital invested and you're still making income in terms of yearly earnings, right? Now, the difference between earning dividends and having capital gains is that before you realize your gain, your income or profit from capital gains, you're going to need to sell that investment in order to make capital gains, right? Now, whereas if you're invested in dividends, you don't need to sell your investment in order to make capital gains. The company pays you from the profit they make within the year, right? Sounds good, right? All right. So we're going to talk about the elephant in the room, which is fear. What if the market crashes? What if my investment crashes, right? This is a valid question. But now, what we need to know is that in the past 100 years, a lot of the stock market goes up and down, but on the average, it's been up for 76% over this period of time. What it then means is that if the market has made gains in 3 out of the past 4 years. So if people that invested in the market in 3 out of every 4 years, they tend to make capital gains. They tend to make profit, right? Because the market stays up much more than it crashes, right? Now, another question I tend to get is, how much do I need to get started? Interestingly, you don't need thousands of dollars to get started. Now, back then, I understand that before you can invest in the stock market, you probably need a whole lot of money to get started. But these days, you can actually buy fractional shares. What it means, for example, if you're trying to buy shares of Costco, a share of Costco today is about $1,000 plus. Even if you don't have $1,000, you can choose to buy fractional shares. You can choose to buy $100 shares of Costco without having to buy a whole share of Costco, right? That means that you can start with as little as $50. All you need to do is to start small, grow, and stay consistent. Now, lastly, we're going to talk about the steps on how to get started. The roadmap. We're going to talk about the roadmap on how to get started. First, you need to choose a brokerage account. You need to open an account with a brokerage account. So assuming you reside in Canada, you can choose to open what we call registered account, the likes of TFSA or registered tax-free savings account, or you open a registered retirement savings plan, right? With any bank, you can open with brokerage firms like Wealthsimple, Questrade, or Interactive Brokers, or you can choose to open in any of the bank platforms. I personally like TD Bank platform, right? Even though I also used Questrade as one of my favorites, but I also use TD Bank platform because they have so many educative materials in there. I also reckon that a lot of people like using Wealthsimple. So whichever one you choose to adopt as your brokerage firm, the main thing is to get started because they all offer similar services. So the next thing you want to do is to fund it, right? You can fund it with as little as $50. Now, the next thing you want to do is to select how you want to play. Do you want to invest in index funds, or you want to invest in individual stocks, or you want to do both, right? I personally like doing both. And one of my strategies is to do what I call the 2 index and 2 tech funds, which means investing in 2 index funds and choosing 2 technology funds. Now, what that does for you is that you're going to see growth on the technology fund side, and the index fund is going to ensure that you're well diversified and you're not going to lose a lot of money if the market goes south, right? Now, the third thing you want to do is to start learning. When you learn, you keep investing, and your future self will be very happy that you did. Now, here's where we're going to stop in this video today. In our next video, we're going to talk about how to invest tax-free. We're going to talk about how to select stocks, and then we're going to dive into the world of the common mistakes that people do when they want to get started. All right, feel free to share this video if you learned something today and you're very confident about starting today. Feel free to share this video with a friend or a family member, and don't forget to smash that like button. Okay, catch you later in our next video. Bye for now.